Now, we're seeing quite the rally across Asia, particularly in tech stocks. But are investors being too optimistic at this point?
Well, firstly, thanks for having me. It's great being with you again. And in terms of what's happening in markets, there's really a couple of factors that are driving it. The first one, of course, is optimism that there is finally going to be a conclusion, to the conflict in the Strait of Hormuz and in relation to Iran. Now, that is Friday. And as we've seen with many of these agreements or potential agreements in the past, they're agreed to in principle, and then they simply don't materialize. So we shouldn't count our chickens before they hatch. I personally would be optimistic but cautious about what is going to happen. We've got everything pointing in the right direction. It appears that more shipments are starting to flow, but it still is a little bit too early to say that things will ultimately resolve, especially since, like we've seen in the past, a conflict might erupt with one of the several parties launching an attack on the other and then things escalating again.
Now, gold has already jumped more than 2% as inflation risks ease. Could we potentially see gold return to those record highs earlier in the year?
So in terms of what might be happening here, so gold had been surging. However, gold is often a bit of a safe haven. And at the moment, we're looking like interest rates might be heading downwards, or at least not upwards too much more, which reduces some of the price pressure on gold. After all, gold is often a safe haven asset, and it's more active to some extent when you might be sort of seeing that during periods of volatility. But at the moment, gold might be less attractive. Of course, with interest rates potentially going down, then the counterfactual, so there's the opportunity cost of holding gold, might decrease. However, in reality, we're moving more toward a period of safeness, then gold might have less price pressure.
Meanwhile, the Federal Reserve is set to hold its first policy meeting under new chair Kevin Warsh this week. Could the dollar continue falling even after the Fed keeps rates unchanged?
So what's likely to happen at the Federal Reserve meeting is they're likely to keep rates on hold. And now clearly what happens going forward is going to depend on the data that comes forward, i.e. what factors influence inflation, what factors influence employment. But with a resolution to the situation in Iran, assuming that holds, that will remove some of the inflation pressures and therefore potentially give the Fed more headroom to cut sometime later this year, potentially into next year, which is ultimately going to be good news for the market. Now, if the Federal Reserve is moving toward more of a dovish cycle later on, if you're just looking at this from a carry trade perspective, that would reduce some pressure or reduce the price pressure on the dollar, which could cause the dollar to soften somewhat, especially since we're seeing the safe haven trade start to come off as well. So all of these factors might cause the US dollar to decrease at least a little bit, or at least to have some less pressure upon it.
And if a deal is in fact signed on Friday, could we still see lingering effects on the US economy going forward?
Absolutely. It will take a little bit of time for the situation to resolve itself. So, for example, oil takes quite some time to go between point A and point B, and then it needs to be refined at the end of that. So we are going to see ongoing effects for at least some time. However, the market is going to start pricing in a degree of stability. So the effect of the conflict is going to start to taper off the more and more safeness we have over time and the longer we get from the conflict. However, of course, there will be some ongoing effects in terms of what people do with supply chains. Because after seeing the Strait of Hormuz could be weaponized, many companies or countries are going to look for at least avenues to de-risk what would happen in the Strait of Hormuz. Even if it's only a small amount of the shipments being slightly deviated, it still will linger on in what people are doing, at least for a little bit after the resolution occurs.
Mark Humphrey-Jenner, Associate Professor of Finance at the University of New South Wales Business School. Great to have your insights. Thank you.